Hello, and welcome to the Banker's Tech Talk video series. We are filming on location at Level 39, a FinTech accelerator in London. I'm Joy Macknight, Deputy and Technology Editor at The Banker, and I'm joined by Rezaah Ahmad, CEO of WiseAlpha, a fixed income platform giving everyday investors and savers access to corporate bonds. Rezaah, thanks so much for joining us today.
It's a pleasure, Joy.
So how is WiseAlpha really disrupting the lending model?
We offer institutional corporate bonds to individual clients so they can get single bond exposure to major corporates such as Virgin Media, RAC, Ocado, companies that people know and use every day. Many of these are listed companies where you can buy the stock. It's very difficult to buy the actual bond. And the reason for that is that most of the global banks who structure these types of bonds, they sell them in incremental sizes of 100,000 to 200,000 pounds in size, which makes it very difficult for 99% of people to afford that for a single investment. So what our platform does is we break those down, those large chunks, into very mini bite-sized pieces so that people can build a portfolio with an affordable size. So a minimum of £100 per bond. What we're really trying to do is to create as much access and widen the investment audience for this asset class. Open it up as much as possible to the everyday investor.
You launched a customizable retail investment bond. What exactly is that, and how does it work?
We launched a bond in early October where people could effectively choose their maturity and the rate that goes alongside that with them. And the interesting thing about the product is that the proceeds are used to invest in all the different bonds on our site. So effectively creating a diversified bond of bonds, but giving investors the kind of relative certainty of a return that they can expect over a certain time frame. So we've seen significant uptake in that. And we're just about to launch a slightly different iteration of the same thing, which we call RoboWise. And we're really excited about this tool. What it is a customizable portfolio manager, which you control. So you can set which bonds in which industries you want to invest in. You can even deselect certain companies from your portfolio. It will automatically diversify you. It will also take into account your monthly investment habits and reinvest spare proceeds or spare capital that's come back from repayments of bonds. And so we're really excited about this because it's a new spin on a new type of product where it's not a black box. It's an automated investing program. But ultimately where you, the individual investor, has control of it and can turn it off and on at any time.
Why do you think that the debt capital markets is really ripe for digitization today?
So if you think about the corporate debt markets, that market has grown 2.7 times since 2007. It's now a 11.7 trillion market globally. So that's the value of all corporate debts outstanding. This, to me, is a great example of how you've got a great asset class which is booming, but it's massively underrepresented in the mass market for everyday investors. Because if you think about who is actually participating in it right now, except for the savvy people on WiseAlpha, it's 150 big global funds and the top 10 global investment banks. There's a very small pool of actors in what is a multi-trillion asset class. And so digitizing that, reducing the costs, making the transaction sizes smaller is going to have, in the future, we believe, an enormous impact. And it's basically the biggest area of fintech, which hasn't seen a huge amount of technological development, in the last 10, 15 years, like you've seen in the equity markets or, even at the kind of grassroots lending levels with peer-to-peer. So that's why we think it's ripe for digitization. We're leading the charge on that. And we kind of expect it to be the biggest area of fintech probably in the next 5 to 7 years.
Okay. And my last question is really around the fact that you have FCA authorization.
Yes.
How important is that really for your business model?
Well, I think it's very important for all financial businesses to have regulation. So when we started, we had to have a license to operate. And it was very different from some of our peers who are in slightly different niches of the financial lending sector of the market. So the peer-to-peer guys had a transition period. Obviously, they were unregulated beforehand, but we had to start off being regulated. And so, I think it's good. It instills kind of best practice from the very get-go. and it also makes you aware of the kind of detailed compliance and internal systems and controls that you need to do to develop the business further. And so I think it's very important, and I think it's no different for any serious investment firm, and we obviously want to be viewed as a serious professional investment firm.
Excellent. Thank you so much for your insights, Rezaah.
Thank you.